Hello everyone, welcome back to another video. In this video, we'll discover the pros and cons of dividend investing. A few days ago, I got my dividends from one of the companies I invested in. As I have the other stocks holded, I checked the dividend dates of Singapore stocks. There are many companies paying dividend in April. As you may know, Singapore companies pay dividends 3 to 4 times a year. Singapore Stock Exchange provides many good high-yield dividend stocks. The dividend yield ratio is even higher than usual, attributed to the fact that the stock market crashed due to COVID-19. Anyhow, if you buy one of the stocks you see now, you will have dividend income amounting to 7% of your principal. When this topic, dividend investing, came into my mind for this video, I instantly recalled a dentist, Pete Huang. To mention briefly about him, his professional job is a dentist. Despite the fact that he's not a full-time investor, he made a considerable profit with dividend investing. And his book, based on his experience on dividend investing, is a best-selling book in Korea. Unfortunately, his book is only available in Korean. However, you can watch his videos to learn from him as he shares his know-how through his YouTube channel. The channel name is Dentist Pete Huang. Notwithstanding the audio is Korean, you can catch the message with the visual information. His channel link is available on the top right. The instruction was rather long. Before we go into detail, let me start with a question. Which one is better? Stock with dividend or stock without dividend? As you may have noticed in this video title, there is no correct answer. There are pros and cons. Let me give you an example. Delta Airlines, a company that has been talked a lot since Warren Buffett got a huge loss. Delta Airlines is a dividend-friendly company, and on top of that, they actively buy back. A couple of US airlines spent 96% of free cash flow last decade on buying back their own shares. Buyback artificially boosts the stock price. Let me tell you why. Market cap refers to the total value of all a company's share of stock. So the market cap is at a standstill, but the number of shares is decreased. Eventually, the share price jumps up. In addition, some indicators look better facially. Return on equity is an example, which is calculated by dividing net income by shareholders' equity. So now, you may come up with an idea, okay, I got to buy Delta as this company is really trying to improve shareholders' value, it seems. However, if you look at the backside, it may be against shareholder value in the long run. For example, Delta has made a positive net profit over the past 10 years except for 1 year. But free cash flow has decreased compared to 10 years ago. What do you do if you don't have enough cash to survive the situation like we face today? 2 options only: receive bailouts or go bankrupt. I have a different story in Warren Buffett's Berkshire Hathaway. The company has never paid dividends, and shareholders do not ask for dividends. As the shareholders believe Warren Buffett can help you build wealth better with their potential dividend. What we have seen so far, dividend investing has advantages and disadvantages. I have summarized it for you. Let's discuss the advantages first. The first advantage is literally dividend. You can enjoy dividends on top of capital gain. The second advantage is that you can do reinvesting. I personally invest in very aggressive ones with my dividends. For example of leveraged products, cryptos, and VIX. Let's imagine you bought a share of dividend stocks at $100 and you earn dividends of $5. Luckily, you bought a put option before COVID-19 with this $5. The put option skyrocketed over the coronavirus threat. Suppose $5 becomes $50, your total return is 50%, which is $50 divided by your principal, $100. In the worst situation of your put option hitting zero value, you essentially didn't lose any. In the movie named Big Short, you can actually see this investment strategy. The third advantage is lower volatility. Companies that give dividends are generally large caps, which are less volatile than small caps. Here are three disadvantages. First, dividend tax. Dividend tax would be imposed depending on where you reside. Second, opportunity loss. As aforementioned, a company could lose investment opportunities by paying dividends. A couple of Korean investors complain about the low dividend yield given by the Korean companies. At a glance, it seems a reasonable complaint, but Korean companies have chosen to reinvest instead of paying dividends in order to capture the numerous opportunities created by Korea's rapid growth. Whether startups continue to invest for the future or to pay dividends or to be in the middle, there is no correct answer. It's not that simple to make a decision. Third, less dynamic. This is the other way around of the third benefits that I mentioned. Let me recap the pros and cons of dividend investing. The pros are dividends, reinvestment, and lower volatility. The cons are tax, opportunity loss, and less dynamic. Suppose you decide to invest in dividend stocks. Here are three things to consider before buying. First, mutual funds or direct investing. Personally, I think direct investment is better for dividend stock investment. If you look at the fact sheet of famous dividend funds, it does not outperform the benchmark. Let me tell you one thing to be in mind. When you compare with a benchmark, you got to look at the performance of 3 months, 6 months, 1 year, 3 years, 5 years, and 10 years. It is recommended to choose an active fund which outperforms on each period. Otherwise, better to choose an index fund. There are a number of reasons why underperformed. First, asset size. If a fund size being too large affects negatively. The risk that arises in this situation is that to invest too many stocks, which makes less agility. In other words, a little differentiation against index funds. Second, cash hold. What I have seen so far, many mutual funds put 10% of their assets into cash. Coming back to the three considerations, the second point to consider is diversification. You can check out my earlier video that explains well. The video link is on the top right. The last consideration is reinvestment. Reinvestment is a must. Otherwise, it's better to invest in a company that does not pay dividends. The reason being of this is opportunity loss, as I mentioned a while ago. Definitely, investing in mutual fund is easier to manage for average investors. Hence, I will introduce famous dividend stock funds from Korea and Singapore. Disclaimer, this is not my recommendation. In Korea, Shinyoung Securities dividend stock funds are the most famous in terms of fund size and investors' recognition. In Singapore, the Lion Global dividend funds are famous. Lion Global is also very popular with Vietnamese fund. Whatever you choose, direct equity investment or investing in mutual funds, the bottom line is this: who will enrich shareholders? Thanks for watching. Hope you guys enjoyed. See you in the next one.